Hi guys, it's CryptoBirb agent speaking. Welcome to today's Friday webinar. Well, now that the recession is confirmed, a lot of markets had seen a little bit of an upwards movement. Some upward sticks were actually going through the weekend for the cyclical stocks as the energy stocks, energy markets, energy sector has coming off a little bit, has been coming off. And this is truly something, I should say, fundamental, right? You're not really looking at some exceptional changes that happen typically once in generation, once in every 40, 50 years. This is exactly what we are looking at. And we are going to disclose, we're going to also discover how we are potentially, setting ourselves up for either a big failure or the biggest investment and the best shot of our lives as traders, as investors. If you guys are ready to hear more, make sure you stay tuned. We're going there right in a second. Welcome. It's Agent CryptoBirb. Like I said, welcome. This is actually exceptionally beautiful Friday out here. I should say, the weather up in Portugal is pretty always amazing with this ocean breeze. I love it. And I really hope you guys are doing well. Let me know where you're writing from. Let me know how you guys are doing today. I really hope everything is fine because we have pretty much, a lot to discuss as always. However, I'll need to be short on time because, well, that's the very gist of the webinar, right? I'm trying to actually convey as much message in as short period of time as possible. So that's what we're going to do today. Let's give it a go immediately. Well, to start with, I want to just kind of like outline something and highlight something that is important. Many people would tell you that, well, because the energy has come off, significantly of the peak, for the XLE energy sector, it does kind of like make people think that, okay, the commodities are in the bear market, that the energy is coming off, it's in a bear market and everything is back good, it's back to normal. But this is not necessarily true. And there are a couple of reasons to it. Well, first of all, because we are looking at truly exceptional situation. Like I said, we are looking not only at the changing trends on the macroeconomic side, on the monetary policy, on inflation, unseen basically ever since 1980s, 1970s, and some exceptions. You're looking at trends, exceptional trends, which are being broken up to the basically broken to the downside. You're looking at different market interrelations and intercorrelations, which, well, seemingly were poorly or negatively correlated to kind of like inverse right now, and they seem to kind of like move all together. Dollar is pressing over its 30, 40-year trends. So it's actually, like I said, exceptional. Once in every 40 years happens situations like this, the set of situations like this. And, well, the truth is that this corrective wave, just like I say here in the tweet, for the commodities, and this is the commodities Bloomberg index, BCOM aggregate, mainly driven by energy and metal prices, you're looking at the corrective wave, which is rather secondary, right? Commodities are still in a major bull market on a 50-month basis, and that's something you don't really argue. Who we are with this 50-month moving average. And ever since January or February 2021, with this major breakout above 80 points, 80 basis points for this future contract, you are looking at an exceptionally strong upwards rally. This is a bull market. And you can tell that by simple fact, the 50-month average is ascending, it's sloping upwards. If it's sloping downwards, this tells you that the past couple of years, past 4 or 5 years of price action, basically, was in a downtrend. If it reverts back and if it moves upwards, this is how you define a bull market. So this is exactly why I'm saying that despite we might be looking at a little bit of a cool off, a little bit of a, situations where at the past resistances, the BCOM futures, the contract prices for the overall commodities, would actually come off a little bit. So that's not necessarily imply this is a bear market. Instead, we are moving at a secondary. We're talking about a secondary movement within a larger trend, and this may happen right within some anticipated price action territory, for the potential buyers at around 100 basis points, 100 to 105, if you will. Even if it goes this low, I would argue that at first it would encounter a certain barrier and potentially do to move to consolidate for some time. but I don't really expect, unless some exogenous signal happens and unless there's some exceptional, again, change from the fundamental side, exogenous side, outside of the market, some regulators step in or something, then I would really not expect this to collapse and get back to an ugly bear market just like it was before. So as simple as that, right? We have to be very mindful and acknowledge for the trends we are looking at. And in all honesty, there are many trends. Trends are fractals, like I always say. So you're going to find many different trends. Bull markets, bear markets are mainly defined, though, within primary trends. So the higher time frame, the highest time frame you peak, the more it corresponds with a bull market or bear market definition, right? Only if you go down to secondary waves, secondary types, which are basically comprising the higher tides, this is when you kind of like discuss corrective waves, corrective tides, and get this, what we call the bear market rally right now. And this bear market rally, if you think about it, is driven mainly by pretty solid condition of, first of all, the industrial average, right? Dow Jones Industrials with a bullish crossover here. There is an instance of a follow through to the upside right now, approaching this major $33,000 point, 33,000 point, a resistance here. However, the bear market rally may be expected to last, a little bit longer towards the 200-day average. And you can tell this is a bear market because 200-day average just keeps continues to slope down, right? However, there is still, like I said, some major upwards potential, right? Be that at a confluential area, confluence and congregation, basically for the 200-day average and the previous swing high territory, right? This major kind of like double top that happened that later followed through to the downside. Then eventually the broken support that it had, this some people could call it like a maybe a neckline, but neckline is more relevant for the head and shoulders pattern. This neck, this basically support, once flipped, once broken, based on the polarity change principle, should actually work and resist in favor of the bulls. So it makes sense to expect that if we are to continue the rally and follow through over the Dow Jones Industrials, I would argue that 34,000 points is going to be the next stop. And actually, composites are getting stronger, right? When the industrials are yet to touch and break their, May's highs, this has already happened for the composite index, for the composite stocks, which are strongly gaining on momentum, gaining on power. You can tell this trend is getting more and more vertical, right? It's getting steeper, if you will, right? We actually transitioned from this direction to this direction. You can tell this strength is arising. And as long as it does, there is this continuity kind of like to it, right? There is this overall tendency to persist and to last. So this persistence may take it, in my opinion, arguably as high as 200-day average resistance, again, 13,500 points for the composite index. And if we go to the large caps, of course, large caps are somewhere in between the Dow Jones Industrials and composite stocks, with the main resistance at 4,300s, 4,300s, which is still going to be pretty good rally and pretty good recovery ever after bouncing off the lows, 3,300s, right? So this is definitely something really cool. We are also, by the way, looking at the discretionary stocks basically breaking away here for a bullish window. This consumer discretionary kind of like stocks are called cyclical stocks, and just like basically you would look at technology, which is also very similar, right? Or the communication services, which is lagging behind a little bit, but still potentially accumulating here for a potential breakout. All this comes together within a cyclical stock bear market rally, right? Energy sector, like I said, is coming off strongly and sharply after actually promising close. You were looking at this breakaway gap in here firstly, then actually there was some exhaustion appearing, an overthrow on peak. You could argue that once the energy sector actually broke to the upside through and over the 50-day trend, that you would look at an overall follow through. However, on the next day, we did not only open, this basically leaking bar, leaking line to the downside, where we close within a low within the previous bar, and then open within the previous bar body, and then close well beyond, or whatever you kind of like it, anchor to it. You were looking at this consolidation in the lower range of the major upfronts bar, and this kind of like sinking, this leaking, this ship started leaking with another rejection, right? With another rejection coming up with the dollar strength as well locally. So as dollar kept increasing in strength locally, again in the short term bouncing off the averages, you are looking at a little bit of a come off, for the energy sectors. Here you're looking at 30-year bond yield prices, which are right there at the line, at the line of life and death, if you will. 10-year yield prices have broken down, confirmed so far the rejection with this sort of like a reversal pattern where you would have two gaps, right? This maybe island reversal on some smaller time frames, if you will. However, I would not be necessarily the first to call it this way. You're looking at some local weakness after rejecting the 20-day trend, which is a short-term trend, right? Which tells me that there is this breakdown confirmation retest, which may take it as low as 22 or 2.2 to 2.3% for the 10-year yields. And if that happens, in my opinion, this gives a little bit of strength and this bullish potential for the stocks to develop and for Bitcoin to grow, right? So I do really hope that this is so far understandable, because we are going well beyond, and now discussing the overall performance year to date. Let's take it year to date. Ever since 2022 started, you are looking basically at performance at about 30% leadership, from the energy stocks in terms of the percentage, right, gained over the year, in a summary. Then there is utilities 5% upwards, which tells you that if the utilities are upwards, or they are the second strongest performing market, right, this makes you think again that there's a lot of weakness, right? And this weakness is transparent as long as we are within the recession, right? The recession is basically the business cycle when we know that the economy is driven by the stock market somehow, right? There are many complications and implications to it. However, ideal market cycle for the stocks leads 6 to 9 months. What lags behind, which is the economy, right? So the 6 to 9 month kind of like period is that we've just basically started going downwards, going south, started contracting on the economic scale, which was confirmed by the second consecutive and consequent GDP decline, okay, negative probe, which tells me we're in a recession. And if we are in the recession, freshly off the inflection point, this tells you typically, ideally, you would still have a little bit of more downside on the bear market. So we do know that there are some secondary tides, to the bear market as well. So I would argue we are somewhere in the secondary tide, right, to be followed by lower lows, still to later bottom out. However, I don't have a crystal ball, so I have no idea about that, right? Well, I'm not going to tell you what is going to happen exactly in the next 5 minutes or an hour or a day or a week or a year. I have no idea, in fact, because there is so much, almost like an infinite amount of data flowing in on a real-time basis on every single second and minute that impacts the markets. It is impossible, virtually impossible, to tell what's going to really happen in a week from now, not to mention, a year from now. So take it with a grain of salt, of course. However, you're looking at the relative rotation graph, which is showing you something that we call a hook turn, right? This hook turn where Bitcoin, from strong underperforming asset against the rest and against the entire bunch of other markets, right? As in the cyclical stocks or the defensive stocks, the Bitcoin was the biggest laggard and the biggest underperformer, right in the very corner, severely underperforming the S&P 500. However, with this hook turn, and this hook turn is a rapid change of direction, It's like a reversal, right? But this difference is that the reversal happens on the relative strength and the relative momentum market definitions. So here, Bitcoin is actually turning and curving up a little bit, starting to catch up, on the momentum. It's starting to build momentum. But if we really want to see it catch up and really start taking the lead, which I'm not really expecting anywhere in the near future, then it would need to move, right? Rotate along the follow the sector rotation scheme and picture into the leading quadrant. So we are at the 180 basically opposite extreme. We have been severely underperforming, and I would not really expect for Bitcoin to outperform anytime soon, as long as this is a bear market. And confirmation for the sector rotation is exactly common with the cyclical stocks, like I said, consumer discretionary XLY, XLK technology stocks, and the communication services are all in the moving towards the leading quadrant right now, in the improving quadrant, confirming growing momentum and growing relative strength. However, still yet to beat the S&P 500 on a relative strength basis. However, there is no leadership. Dollar had been leading, however, it stepped away, it stepped back. Same for the energy, and you can tell, right, that the XLE is a very long tail on the relative strength and relative momentum side, which tells me that again, this long tail is a really strong movement. It's very hard to stop. It's like a massive truck just really going in one direction. And unless there is a wall, it's going to crash. It's not going to stop. Dollar breaking up, like I said, locally, and confirmed a monthly close, the June close, over the major resistance of 104.5 points for the dollar index, which confirms the breakout. Right, there's been some intramonth weakness with this weak tail, with this long upper tail to the candle, to the bar. However, the close through occurred, and this tells you that dollar is really willing to go stronger. Netflix, just for the sake of it, is really wedging up a little bit here with this major massive gap, somewhere between 250 and 330. The entire gap is supposed to act as a resistance. So it's not said that it's going to invade and close beautifully the entire window. However, it may happen that you're going to see some Netflix pullback and rallying back, basically to match the bear market rally, as it had been lagging as well, similar to Bitcoin, severely underperforming. And then finally, Bitcoin, just giving a quick check, right, how it all stands. Well, we had successfully closed through the 200-week average, which is a little bit of more encouragement, to the bullish side of the market. We are looking at already, some follow through, arguably, locally on the higher high and higher low basis, right? Then there is this intraday candle blind pattern at 0.80 correlation. This correlation coefficient on the 7-week basis, and 0.80 tells you there is a strong correlation between the S&P 500 prices and the Bitcoin prices, right? So as long as the S&P 500 makes a move upwards on the 7-week basis on average, then Bitcoin is more likely to catch up than not. However, those markets are different, and there can be some exogenous signals that can be bullish for the stocks but bearish for the cryptos, just like regulations, for instance, right? But we are definitely in the bear market. 50-week average is climbing down. 50-week average is a little bit of, like a yearly average price, if you think about it, 52 weeks. And having this drawdown of 75% peak to trough, I would argue that, there is still a little bit of more downside potential there. I'm not saying it will, but 75% is typically too little to revert Bitcoin to put in historical troughs, because the empirical frequency and likelihood for Bitcoin to go towards 80 to 90%, where it typically bottoms out off the peak, I would argue that we still may make some movements to the downside. So again, despite there is this local bullish potential, we may test, I would argue, some area around $28,000-$30,000. But you're still likely going to be looking at some local overthrow, and then potential for lower lows, potentially again towards like perhaps $10,000-$14,000. Regardless, again, no crystal ball there. Those are just rough estimations. If that happens, I'm really prepared for it. I'm going to be putting in my final chunk of Bitcoin, planned money But locally, you're looking at a little bit of noise, right? There's been chopping all around with tons of overthrows. Here it's ranging, with a trap on bottom and the top. Typically, traps tend to perform better in the opposite direction. Failed patterns, failed breakouts, right? Failed breakout here, boom, performs better in the opposite direction than anticipated, just based on the size of the pattern, right? Here, an overthrow, basically, leaking lower than expected, right? Here, because of overthrow at the very bottom, I would argue we still also have the chance to break up upward, to break to upwards, right? Because there is this little bit of encouragement with a trap, with a liquidity to hand grab, if you will. It's really irrelevant how you call that, because it truly matters for what is important. So here again, you guys are looking at some ascending movement, right? With tons of higher highs and higher lows. However, it seems to be weak on momentum side, right? And as long as it's weak on the momentum side, it's not really going to pull off any spectacular movements. So I'd argue that if you really want to see, guys, Bitcoin push and pursue and really follow through, then we really have to knock the $25,000 resistance off, in my opinion. Finally, guys, I'm here to tell you that if you are really curious to know more, to learn more, and ask some questions, throw it to my team and to myself, and want to gain it within 24/7 support, to ease your stress, to help you trade better, to get knowledge, to get this really uh, all the premium materials that you really need to position yourself better, to become a really real trader, full-time, a profitable trader, then I'm going to get you all of that 7 days for free. Go on, save yourself time and money on expensive mistakes, and come and join us on a 7-day free trial. No credit cards required. You're going to get all this and so much more knowledge from me and from my team 24/7 internationally, beginner friendly. Go and put in your email address, put in your name. We're going to set you up immediately, guys. Come and join us in the Birb Nest, because there is no room for missing out anymore. If you appreciate it, guys, hit the thumbs up, smash the notifications, leave some kind comments and questions if you have any. However, I'll kindly welcome you in the Birb Nest in the next couple of minutes. So make sure, guys, you stay tuned for the upcoming releases. There's plenty of those. And for now, that's all. I wish you all a pleasant day. God bless you all, and I see you around. Bye-bye.